Dear friends, moving forward, so it is my privilege to introduce the next speaker, Shri Pijush Kanti Das, who is the Director of Governance, Risk and Compliance at Cromec Consulting. So Professor Pijush, as I would say, is a certified anti-money laundering specialist, also has CISI certification on UAE financial regulation, and is also a CAIIB. He has been a senior lecturer for over 9 years with the Emirates Institute of Banking and Financial Studies, where he taught diverse subjects. He also been the president and SOX coordinator with SIFI Technologies India, where he was head of investor relationship. He has also worked as chief dealer and head of debt funds at SBI Mutual Fund Mumbai and head of treasury at SBI Singapore. Sir has a vast experience of over 3 decades as banker, and he has worked in India, Singapore, Nairobi, and different areas like treasury, fund management, credit management, etc. So it is our great fortune to have him as a speaker on AML today. So let us put our hand together and welcome Professor Pijush Kanti Das. Thank you.
So, ladies and gentlemen, it's a great pleasure to be here in front of you and in front of this august audience. It will be such a great pleasure, and I hope, I'll match up to the speakers who were there before me. What fine speakers there were. So, ladies and gentlemen, I'm here to talk about a rather drab subject, anti-money laundering. Anti-money laundering. I got my voice carried. Anyway. Yeah, I just want to tell you why is this sense there that on anti-money laundering and financial crime we are stepping back. That is because most of the criminals stay ahead of the game, and so we have to match up, and that's why there is always a sense we are slipping back. And I just want to tell you, how has the anti-money laundering landscape changed? And I want to give you a little story. The story goes like this. Professor Einstein, he was a scientist and also a professor. So once he was distributing, question papers to his students. The question papers, the students had one look at the question. Professor, but this is last year's question. Last year's question paper that you've given to us. So the professor said, yes, they are the last year's question papers, but the answers to the questions have changed. In money laundering also, anti-money laundering also, the question always remains how to fight and deter money laundering. But the way to fight money laundering has changed. And that's the point I want to make here. The changes that we've had to fight money laundering. So, ladies and gentlemen, I have put up this brief presentation. By the way, keep your mobile phones ready. I'm going to have some short quizzes. You'll find it interesting, right? So, along the way, I will be asking you some questions. Try and answer. You'll have fun, right? Is that okay? Great. So, what am I going to talk today? One, what is money laundering? I think there are a lot of, my interviews with people have told me money laundering means different things to different people. So let's find out. What are the money laundering crimes? What are the typologies, the methods by which people do money laundering? Why accountants and auditors are vulnerable? What are the obligations of auditors and accountants? One of the most important changes that have happened, and what are the AML internal controls? Sensitive areas of due diligence process, governance, and culture of compliance. So those are the areas that I'm going to talk. Is that okay, please? Great. Okay. Before we get here, I'm going to ask you some questions. I'm going to quiz you. Ladies and gentlemen, join the quiz. You can type in slido.com and type in that code. You can join the quiz. There'll be 3 questions. Yes. Slido.com 3494242. Request, it's voluntary. Please join the quiz. I have some 3 very interesting questions for you. Yeah, I can see Vinod, Anu. I hope you love your names here. It can take all of you on this. We'll have 3 questions now. Another question I'm going to ask you. I can see 33 people are in, 35. That's good. Should I move on? Should I ask the question? Yeah. Here we go. Here's the first question coming up. What is money laundering? You have 45 seconds to answer. And we will get a leaderboard also. That's half a century in. Very good. That's wonderful participation. Okay, so this is what we got. And what's the correct answer? Hiding dirty money to make it look like clean. But majority of you said dirty money cannot be made into clean money, ever. Okay, so who's the leader? Bhagyashri, Yasmin, Golte, John, Joyce. Congrats. Here's the next question. Dirty money is the profit generated from crime. What is the crime called? The crime which generates the dirty money. Thank you for participating. So what's the correct answer? Predicate crime. The crime which generates the dirty money. And so Yasmin, STI Joyce, Alfred, Majid, Laila. The last question in this round. Predicate crime and money laundering are 2 separate and independent crimes. Is this true or false? Here we go. So some of you said true, some of you have said false. The answer is it's true. You can be punished for the predicate crime, the crime which generates the dirty money, and also for the money laundering crime. That's the right answer. So in this round, let's see who's the winner. STI Joyce, Sebastian, you see the flowers coming down. Alfred, Yasmin, Shruti, Neeraj. Congrats, give them a hand. Okay, can we get to the presentation? But just stay here for some more time. Yeah. Thank you. So, ladies and gentlemen, I just summarize what you did in the quiz. So, what is money laundering? Hiding dirty money to make it look like clean. Can I? Oh, sorry. Right. So what's money? Hiding dirty money to, you did it in the quiz. Concealment, and what is hiding? Concealment of the sources of dirty money. Hiding doesn't mean you put it in the closet. You actually do transactions to conceal the sources of dirty money, to make it appear they originate from licit sources. And dirty money is the money generated from crime. The crime that generates the dirty money is called the predicate crime. You answered that question too. What is the link between predicate crime and money laundering? First, the predicate crime generates dirty money. It must be hidden. It must be hidden because if you're caught with dirty money, you could be arrested. The dirty money could be confiscated, so you need to hide dirty money. And to make it look like clean, this is money laundering. And first there's a predicate crime, there's a second crime, the act of hiding or money laundering, and predicate crime and money laundering are two separate and independent crimes. Okay, can you help me? I have to ask you another question. Here's my question to you. Okay. You have to put it there, right? Actually, this Slido can be embedded on the PPT. We could not do it here. Here's my question to you. Please join Slido.com and answer this question. What are the money laundering crimes? What do you think are the money laundering crimes? And you can type out your answer here. Because I give you multiple choice, you'll make out the answer. So I want you to type out the answer. What are the money laundering crimes? Vinod, hiding dirty money. That's only one. Predicate crime and hiding dirty money. Hiding, placement, ransom, drugs, predicate crime. Trafficking, arms, drugs. Okay. Yes. You know, in my talks with people, most people, when I ask them, what are money laundering crimes? They say drug trafficking, they say arms trafficking, human trafficking, fraud, but all these are predicate crimes. Can we move? Can we move? Yeah, so many of you have given the right answer, but some of you have said drug trafficking. They are all predicate crimes. So I just want to show you what are the money laundering crimes and what auditors should be scared about. The money laundering crimes. Yes. Thank you. So what are the, okay. So what are the money laundering crimes? Most of you have given the right answer, and that is concealment. Money laundering crimes, concealment of dirty money with full knowledge. If you didn't know and hid dirty money, that would not be money laundering crime. Second, acquisition, possession, use with full knowledge. So if you acquire a dirty property from a money launderer, from a criminal, you would be considered, knowingly, you would be considered a money launderer. Buying dirty property knowingly from a money launderer, if he sold you at a discount, you know it's dirty property, and you buy it, you would be committing a money laundering crime. Third, arrangements. This is where you count. Helping a money launderer to conceal dirty money is money laundering. It comes under the anti-money laundering law. So arrangements or facilitating, advising a money launderer how to conceal dirty money is a money laundering crime. And failure to report. If you do not report a suspicious transaction, you would be committing a money laundering crime. And finally, tipping off. If you tip off the client that he's suspected, he's been reported, you would be committing a money laundering crime. And all of these are subject to imprisonment as well as fines. This is where auditors need to be careful, because you would be involved in these, advising the customer. You may observe suspicious activity and you may not report it. So these are areas that you need to take care of. Assistance or advice in concealment. Not reporting a suspicious transaction to your compliance officer. This is also called willful blindness. And advising the customer he is under suspicion. These are money laundering crimes too. Why should auditors and accountants prevent and deter money laundering? Would you like to tell me why auditors and accountants should prevent and deter money laundering? What do you think? Absolutely. Give them a hand, please. We have a responsibility, ladies and gentlemen. We have a responsibility to build financial integrity and trust in the economic and the financial system. And that's the reason each one of us must contribute to the fight against money laundering. And why this is important? To build financial integrity. Why this is important? Because where it is easy to hide dirty money, there will be increase in crime and criminality. And as the esteemed gentleman said, we must protect the future generations against crime. We must protect the country we live in from crime. Our children and families are at stake. So we must nip criminality in the bud. And why should importance of accountancy services to the overall economy is unquestionable. Does anybody question that? It's so important. And accountants play a significant role in the economic and the legal life of a country. And accountants provide objective assurance regarding the financial status, and this helps building trust in the economy, in the financial system, and that's what we need. Okay, I just want to point out, the UAE is required to do a national risk assessment. And I want to show you what are the most vulnerable sectors as per the national risk assessment, because all of you would be dealing with clients. So which are the most vulnerable sectors? Banking, money service businesses, dealers in precious metals and stones, lawyers, notaries, and other legal professionals, real estate agents. And this is slightly older. In this year's NRA, real estate agents have moved to the top. Financial advisors, consultant, investment fund managers, all of them are considered high risk. Credit providers, finance companies. So it's not that we do not do business with high risk clients. Only thing we have to adopt, what I want to tell you is a risk-based approach, and I'll tell you about the risk-based approach. What are the typologies that concern auditors and accountants? The most important, hiding the identity of the beneficial owner. This is the new kid by which people indulge in money laundering, hiding or concealing the beneficial owner. Of course, disguising the illicit origin of funds. This is where we would be most likely to know what is happening, and transacting or extracting value from assets for the benefit of the criminal perpetrators. For example, trying to show him, how to get a tax advantage. So this could be, the money could come from criminal sources. Other real estate money laundering, there's so many ways. I didn't want to detail everything. So many ways, like setting up shell companies to buy property, to conceal beneficial ownership. So real estate money laundering is one of the very, very sensitive areas. Trade-based money laundering, over-invoicing, under-invoicing, phantom shipments, fraudulent consultancy agreements, fraudulent investment agreements. These are, I hope we'll note the word typology. Typology is basically the methods. So what is the vulnerability of auditors and accountants? The National Risk Assessment has said that professional money laundering is one of the major crimes in UAE. So note, caution to all professional money launderers. Who are the professional money launderers? Any guesses? Who are the professional money launderers? Yes. Generally, the term is gatekeepers. And the gatekeepers are those who are charged with the duty of preventing money laundering, but they assist in the act of money laundering, right? So they are the gatekeepers, and that is professional. And this is one of the major crimes as per the National Risk Assessment of UAE. Okay. Auditors examine books of account, controls of the audited entities. They are in a unique position to identify suspicious activity. Not reporting would give rise to the crime of failure to report. Everyone is a covered institution, and you're charged with the responsibility of reporting suspicious activity. Not reporting, failure to report crime, willful blindness. Criminals may abuse the services provided by accountants because they want their accounts to be legitimate. They want their falsified accounts to be shown as appropriate. And it is possible that accountants may review and sign off such accounts, and this would lead to the crime of arrangements, facilitating money laundering. You have to do a few simple things to get this right. You could allow the misuse of client accounts, may become involved in performing high-value, unwittingly, you may become involved in performing high-value financial transactions for concealment. It is generally believed most criminals use insolvency to generate, to clean up the act of dirty money or to make it look like clean. So auditors would be vulnerable, and auditors may unwittingly assist tax evasion and VAT fraud. So what are the obligations of auditors and accountants? What should they do? Auditors and accountants are classified as DNFBPs, designated non-financial businesses and professions. And they are all regulated in the mainland by the MOE and in the mainland and the commercial free zones. Just give it briefly, they are all covered under AML CFT law number 20 of 2018, the cabinet decision number 10 of 2019, the cabinet decision number 58 of 2020 regarding beneficial ownership. Who is a beneficial owner? And cabinet decision number 74 of 2020 on targeted financial sanctions. Now, what is targeted financial sanctions? There are international sanctions, targeted financial sanctions. This is basically about the UN listing. Those individuals and entities, they have been listed as sanctioned individuals by United Nations and the UAE. So that's targeted sanctions. So how do you fight money laundering? Any idea? What are the things that you've got to do to fight money laundering? The 6 pillars. Anybody knows what's the 6 pillars? Anyone? No? Okay. So let me tell you about the 6 pillars. You have to adopt a risk-based approach to entity-wide, and this is what Abhijit mentioned, entity-wide money laundering and terrorist financing risk assessment. You have to find out, you have to discover what are the risks, money laundering risks, terrorist financing risks, proliferation financing risks that your institution faces. And you have to adopt a risk-based approach. I'll briefly explain that. That's the first. And your risk assessment should inform the AML CFT policies, procedures, and internal controls. So, ladies and gentlemen, you cannot just draft AML policies and procedures. You have to craft the policies from your risk assessment. That's the most important takeaway, the new way to do things. And of course, important, appoint a compliance function, independent assessment, internal auditor, staff training, customer due diligence. These are the main 6 pillars that you have to do right. Just take you through some more internal controls. Okay, what is this risk-based approach? Now, this is slightly longish. I just want to say, we do not have unlimited resources. So what do we need to do? We have to decide which activities, which clients are high risk, and focus our resources and the severity of the controls on those activities and those clients. That is the risk-based approach. It is a change. So that means Anti-money laundering is not a zero failure approach. It is possible some little fish might squeak through, but we can catch the big fish, the bigger criminals, and that's the risk-based approach. You have the flexibility to decide who are your higher risk clients, what are your higher risk activities. That's the risk-based approach. I hope that's clear. Yeah? Right. So proportionate measures, implement proportionate measures. Right? So I'll just move on from here. Some of the internal controls that you need to have. One, your company, your staff must be able to identify suspicious activity from the behavior of the clients, from the way the clients conduct business. So your teams must be capable of identifying suspicious activity. So you've got to train them. And reporting suspicious activity confidentially to the compliance officer, who then reports to the FIU. Avoidance of tipping off, you have to have proper controls. What should we talk to a customer? We cannot tip off the customer. So there have to be adequate controls. And employee screening, record keeping. You have to keep records for 5 years. And there are some rules. For example, your CDD records should be kept for 5 years on the date of termination of the relationship. So there's a little change. Internal controls, targeted financial sanctions compliance. Now this is one very sensitive area. You would have noticed over the last 6 months how many seminars and webinars have been conducted on TFS. That's because the UAE is highly concerned. Why is UAE so concerned with TFS? Simply because it is near many conflict zones. And that's the reason UAE needs to take care of this angle, the targeted financial sanctions. International financial sanctions, this is sanctions imposed by the US, OFAC, HMT, and the European Union. So that's another area that you need to look at. And of course, you have to do sanctions risk assessment and possibly proliferation finance. And recently, the UAE government has been focusing on proliferation financing assessment. And what is that? That is simply proliferation of weapons of mass destruction. So we must prevent them, especially in the area of dual-use goods. I hope all of you know what is dual-use goods. Right. Now, remember I was talking about the pillars. This is one area I need to focus on. The compliance function. One of the most important things in your AML compliance program is governance. Whether the compliance officer is independent, whether he can directly talk to the board of directors. This is one major area. Independence of the compliance function. The compliance officer, you can't put anybody on the job. He must be independent, and for that, he needs to be experienced and fit for the purpose. Otherwise, when your inspection comes, you'll find a remark that the compliance officer is not competent. And what is the role of a compliance officer? And it is responsibility of the top management to ensure that the compliance officer does what he is expected to do. And what is that? Design and implement the compliance program independently. Suspicious activity reporting. Staff training. He or she is responsible for staff training and develop with senior management the culture of compliance. So everyone, all top management must ensure that this happens. Staff training. It's not enough that everyone gets trained. The staff training must be customized, and senior management must be trained separately. the frequency of the training, adequate number of hours. You must do a gap assessment of your staff's knowledge levels to ensure proper training is given. And this is very important. Risk-based approach to customer due diligence. Remember, one of the things you have to do is customer due diligence. So what is this? Identification, verification of clients through constitutional documents, identification of the beneficial owner. Just want to ask, you know what's a beneficial owner? Many of you would know. Anyone? Yes. Excellent. Give her a hand, please. Give him a hand. Ladies and gentlemen, just want to say, the beneficial owner must be a natural person, not a legal person, right? And she mentioned about 25%, but he added another rider. He said, anyone who pulls the strings. And so, you could be a 25% owner, but you may not be a beneficial owner. Is that right, sir? Ladies and gentlemen, you could be a 25% owner, but not be a beneficial owner. And it is your responsibility, ladies and gentlemen, to find who pulls the strings, right? And there are some tests that need to be done. For example, what if none of the people are 25% owners? So who is the beneficial owner? Pardon? Yes. Anyone who can veto a decision, anyone who has, voting rights, majority voting rights, anyone who can veto a decision is the beneficial owner. And it is for you to find out who is the beneficial owner. And of course, there are indicators. You can really find out who's the real beneficial owner. And who better than auditors know this. So ladies and gentlemen, this is an identification of control structure. A owns B, owns C, owns D, owned by a mutual fund, owned by a trust. You have to get to the bottom of the control structure. Because the law says you have to find the control structure. Number one, you have to identify the beneficial owner, otherwise subject to penalties. Unless you know the beneficial owner, you really cannot onboard the client. Is that okay, please? Right? Right. Identification of the control structure, identification of PEPs. I guess all of us know who are PEPs. Yes. Also, relatives and associates, close relatives and associates. So you have to identify all of them. Identification of business activity. Now, you'll find that most cases, people, what is the business activity? As per memorandum, as per license. But ladies and gentlemen, you have to do a due diligence. Many times, people actually do business activity which is not there in the license. I'll tell you a case study. One of the case study, a furniture dealer or a curios dealer went to a bank to open an account. On interviewing the person, he said, I only sell curios, furnitures. But the bank was a bit suspicious, so made a visit to the shop. And they found the majority of the items sold were gold jewelry. And he didn't have a license. General trading could mean dual-use goods. So it is very important that we identify what is the business activity. Do you agree? It is a very important thing as per the AML CFT law. I hope you agree. Okay. Purpose of engagement. Why is he engaging us? Could be very reasons, but we must identify why. Okay, sources of wealth, sources of funds, we must identify. Sources of funds, for the transaction, where did the money come from? And overall sources of wealth. So there are methodologies that you can do this. And you have to develop a client profile. Why is that necessary? Anybody can tell me? On onboarding, you have to identify, develop a client profile. Can anyone tell me why? No, but why? Give him a hand, please. Wonderful. Thank you. Right. Okay. Customer risk assessment. You have to identify high, medium, low risks. And ladies and gentlemen, this is the most sensitive areas today. You have to screen your customers. Okay, I've been told to stop. Okay, I'll do that. This is one of the most sensitive areas. Ladies and gentlemen, you could be, if you don't do it right, if you don't sanction screen your customers, you could land up with fines over 1 million dirhams. That's the kind of fines. For example, if you onboard a client who's been listed on the UN sanctions list, you had it. You had it. So you have to be very careful for in appointing qualified people or getting a proper sanction screening platform to get this done. Very sensitive area, ladies and gentlemen. And I'm repeating that thrice to show how important it is. Right? I've done it thrice. And of course, one of the things that we really do not do is ongoing monitoring. It's not that we do due diligence of the customer on onboarding, but we have to continuously monitor the customer during the course of his relationship with us. Because, remember, we have one obligation. What is that obligation? Pardon? No. Obligation as per the AML Act. Why should we monitor the customer? Yes, no suspicious activity occurs. Right? Give him a hand, please. We have an obligation. Because if you have observed and not reported, we could be up for willful blindness crime. Do you agree or not? Right? So monitor the client. Okay. I just move on. Okay. This is one area that you need to focus on. What are the possible non-compliance areas? Offering services prior to customer due diligence. Not identifying the beneficial owner. Not identifying the business activity, not identifying the purpose of engagement. This is mentioned in a new circular, Cabinet Decision number 16, and all have fines from 50,000 dirhams for each violation to 5 million dirhams. Non-implementation of targeted financial sanctions, not reporting suspicious activity, lack of ongoing monitoring. Okay, I just want to move on now to a very important area because I want to sign off. How do you develop a culture of compliance? These pillars have been given by FinCEN. And you can adopt international best practices. One of the most important things, the leadership must support compliance. They must, support compliance. And compliance should not be compromised with revenue interests. Information should be given, shared. It always happens that many of the business units have information about suspicious activity. They don't want to share it with compliance because the client may go away, may be hurt, but you have to share with the compliance. Third, leadership should provide adequate human resources and technological resources to compliance. And if it is not done, top management could come up for sanctions. Programs should be effectively tested by an independent, and this is internal audit. And leadership and staff should understand how suspicious activity is used. Anybody knows how suspicious activity, when you report to the FIU, how is it used? Anyone? Absolutely. So ladies and gentlemen, I just want to tell you how it is used. Number one, when you report, the FIU checks all the information, and if it deems fit, passes on to the enforcement agency, like he mentioned. And obviously that leads to nabbing the criminal. Also, you know, today, money laundering is a international crime, cross-country crime. And so it is very important that the FIU shares information with international partners, other countries. So those are the two things that happen. And the third thing is, it is possible there could be a new criminal, a new method of criminality. And when you pass on the suspicious activity report, the FIU knows new trends, new methods of money laundering. So everyone must understand how suspicious activity reports are being used. Ladies and gentlemen, thanks a lot, and I hope you enjoyed the session. Yeah, sure.
Thank you, sir, for a wonderful presentation and very comprehensive one on AML and compliance. My question is that how do accountant and auditors understand if there have been a tipping off? So how do you find out?
Train your staff to avoid tipping off, number one. That's the best way. Preventive controls, that's one. Second is, well, monitoring staff. Well, I don't think that is the right approach, but you have to keep on, how people conduct themselves, the behavior. For example, there could be indicators. When the staff talk to customers, what are they talking? So you could probably do a test check as to what is happening. So the best way is training, according to me. Right? That's the best way. And training and you see, one of the most important things is what the top management tells the staff, that we support compliance. We do not support non-compliance. This message must go clear and message must go out clearly. And it is very important that in every meeting that you give the message of avoidance of tipping off, reporting suspicious activity. That will be the best way. Otherwise, you will have to spy on employees, and I don't advocate that. Right?
Why can't we rely on the trade license issued by the authorities, or opening a bank account where all the process of AML and knowing directors, know your customer is being complied with, rather than we undertaking AML compliance for the clients and customers?
You know, one of the weak areas in UAE is what? UAE has 39 registries, and it is believed that there could be regulatory arbitrage. I hope all of you understand what is regulatory arbitrage, where it is easier to, get a license, so it's possible. Now, the point is, should we on board a client because a bank has done a due diligence? You're suggesting that. But the point is, there could be complicit bank employees. So, it is the job of all of us to do our due diligence. So, we don't know who is non-complicit. So therefore, we have to do our part, and that's why we have been obligated. I hope that answers your question. Anything more? Because, as I said, there is regulatory arbitrage.
No, that is okay. I mean, then you can put the onus on them that you comply with all the regulatory requirements.
But all of us are responsible in building financial integrity into the economic system.
But if you look at most of the documents that is asked for, it's like going up to the UBO, the details of that, the corporate structure, details of directors, passport copies. And this is the same thing what we do as a filing for UBO, for example. And for getting the company registered, we provide all these documents.
I just want to tell you, UBO is not about the 25% owner. Legal owner need not be the beneficial owner. So who best to identify who calls the shots? It's you. And you can do it from the behavior of the people. Who calls the shots? It could be somebody who's not even a legal owner is calling the shots. It is for you to identify that. And that cannot be done by the licensee, licensor. Right? I hope.
Hi, good evening, Mr. Das. I have a question. That what should be the practical approach of a MLRO while reporting suspicious transactions when a PEP is involved? So PEP, politically exposed person. So in that case, what should be the correct approach on behalf of a MLRO to report the transaction?
You don't have to report that. Who said you have to report?
No, report a suspicious transaction. If there is a suspicious transaction and a PEP is involved in it, then what should be the approach?
See, I just want to tell you, a PEP. PEP can be distinguished, a foreign PEP and a local PEP. A foreign PEP, you have to do enhanced due diligence. Always. Enhanced due diligence. And that means you have to verify his sources of fund, sources of wealth, proper identification, purpose of transaction, business activity, all must be documented. Documentary verification. Local PEPs, you must identify the PEP, but if you think is not very risky, how do you decide he's not risky? His activity is not risky, there are no negative media, then you can make him a low risk, medium risk, depending upon the actual risk. Risk of a customer is decided on client characteristics, jurisdictional risk, activity of the client, right? All these are. So if you think it's not risk, you can make a local PEP into a low risk or a medium risk also. Now the question is suspicious activity. And it need not be necessarily about PEPs, right? Suspicious activity. Now, if you strongly feel that this is not suspicious activity because it can be justified by, an order that has come. He may do a large transaction, and so it's not in keeping with the profile. So in that case, should we report? Because it's not in keeping with the profile. Now you have decided that this transaction is justified based on an order receipt. Now, tomorrow it may be that it is a suspicious activity. It is a criminal activity. So how can you protect yourself? And it's very easy. You record that you are not reporting this because you have investigated and you have found that there's no suspicion. Now this is treated as good as reporting a suspicious. The fact why you have not reported, you record it and keep it on record. Right? What? It is given to you, madam. Who decides whether the activity is suspicious or not? Tell me. Who decides? The individual employee decides whether it is suspicious or not and reports to the MLRO. The MLRO then does the investigation and decides whether it is reported or not reported. And if you think it is not reportable, record your reasons and you are protected. You are protected. And I want to tell you, I just want to ask you another question. Suppose you have reported a suspicious transaction and it was not a suspicious actor. What can happen to you? suspicious transaction, you are protected under law. You are protected under law. Nothing can happen to you. Your customers may come to know that you have reported. All suspicious transactions are confidential. Therefore, you do not even have to share with your senior management the suspicious activity reported by the compliance officer. It's that. So, ladies and gentlemen, my favorite topic, last one. There should be a Chinese wall around compliance. Information can come in, but should be carefully sent out. Chinese walls, all of you know that, right? Thank you, ladies and gentlemen.
To honor Professor Pijush, may I request our past chairman, C.H. Neeraj Ritolia, our treasurer, Priyanka Birla, and our membership leader, Mohammad Shafiq, to come on stage to honor Professor Pijush Kanti Das.